All right, good afternoon, good morning, good evening. All right, guys. So, planning on going over this 100K challenge with FTMO starting in November, which is tomorrow, for the beginning of the week. I want you guys to set up your accounts, whichever account you would like to register for. The way FTMO works is you're basically paying for a challenge. And then if you get verified and you pass the challenge, you then get funded. And on your first withdrawal, you make your whatever you paid for, you get refunded that amount. So they have various amounts. You go from a $10,000 account to a $25,000 account, a $50,000 account, and $100,000. So the prices below are here in euro, but in US dollar, it's about like a buck 80, 250, for something, and 630. So let's go. Let's try it out. Start FTMO challenge. How it works. Okay. So let me go back. So if you want a $10,000 account, if you want to be funded for $10,000 account, the way FTMO works is they have rules that you have to follow to in order to be funded. So they want to make sure you're using proper risk management. You're not going to be a liability to them once they fund your account, and they want to make sure you're following the correct rules. So they give you trading objectives to try to accomplish within 30 days. The minimum, so you have 30 days for the challenge to accomplish the target. The minimum trading days is 10 days, and your max daily loss on a $10,000 account will be $500. Your max loss is $1,000. So you can't lose in a day, you can't lose $500. Within the trading period, you can't lose $1,000. The challenge profit target. So with $10,000, you have to profit $1,000. That's your target. You have to $1,000 and you can't lose $500. So even if you achieve this $1,000 within a day or two, you still have to wait the minimum of 10 trading days to pass the challenge, then go on to the verification process. So here. So the challenge, you have 30 days, 10 days minimum, a max daily loss 500. After you challenge, you then go on to the verification process, which is step two. Step two, you then have 60 days to hit a target of $500. So they cut it in half. So at first, 30 days, they want to make sure using proper risk management that you were able to achieve this profit target of $1,000. Then once you have achieved that target, you go on to the second phase. You now have 60 days to achieve $500, although you can still do it in the minimum of 10 days. So you, uh, even if you do it in 2 days, 1 day, etc., it does not matter. You still have to wait 10 trading days in order to be funded. So you pass the challenge and you pass the verification process. You then wait for a contract to be filled out from the proprietary firm of FTMO, and you will then be funded the available balance that you paid out for. Once you've traded 30 days after being funded, you then are eligible for your profit split, where you take 70% and FTMO takes 30%. So it's a 70-30 profit split once you're funded. So let's go back to the trading objectives. Yeah. So quick comparison. So we got the $10,000 account. Now we have the $25,000 account. If you want a $25,000 account, you pay about two something in US dollars. And your profit target with $25,000 is to make $2,500. Your max daily loss is $1,250. So you can't lose more than 1,250 within a day. You can lose like 1,200, but that's even cutting it close. So probably put like your $1,000 max daily loss limit, or 750, so it doesn't get close to 1,250. And your profit target is 2,500. Now, if you want a $50,000 account, it's about four something a change, I believe, in US dollars, and the profit target is $5,000 with $50,000 account balance. So your max daily loss with 50,000, you can't exceed 2,500. And if you're at the 100K account, no, Lysandra, you get the 10K, not the 100K. Whatever account balance you paid for, that's the account that you're going to get once you pass. So if you paid for this, you're going to get $10,000. You're not going to get $100,000 if you only paid the $100 and something fee for the $10,000. If now you go to the 100K account and you paid the 630 to get funded 100K, you now have 30 days to make $10,000, and your max daily loss is $5,000. Your max loss is $10,000. So you can't exceed a $5,000 daily limit loss, and you can't lose 10,000 within that. We have a question. If I pass, do I keep whatever profits I make after that? Yes. So if you pass and you're in the verification process and you then get funded, whatever profits you make off of the account, you make 70% of that. And the proprietary firm, which is FTMO, they keep 30%. So within a 100K account, you get funded. First 30 days, you make 10K. You're eligible for $7,000 to take home, and they keep $3,000. Now, let's say you don't want to take all your profits. You want to take half of your profits and leave half of them in. You can't do that. So out of 7,000, you can take 3,500 and leave the remainder 3,500 in your account. So you will then have $103,000 and 103,500 in your account. $103,000 and 500 in your account. You'll have keeping 50% of the profits in and taking 50% of the profits. So according to FTMO, it takes about 3 to 4 days for the withdrawal to hit. So whenever you put in an invoice, is basically you're putting in an invoice for the amount that you're eligible for that month. So in 30 trading days, whatever amount that you paid to be funded after 30 trading days, whatever profits you make, you're able to take home 70% of that. Do I have to start tomorrow, or this is something that's always going on? I'm starting this tomorrow, so whoever gets on track with it, we're starting, fresh the beginning of the month. So you guys could, the faster the better. After we're obviously targeting 10 days. So after November 10th, we should be hitting the verification process. And then about November 20th, we're on to close to getting funded, because you have to wait 24 hours after you're verified to be funded. And then from there, you got to wait 30 trading days to look for your first profit. So The faster, the better. We're looking at, December, looking for a first profit split by, close to the end of December. So whenever you're able to start it, you're starting at whatever you're able to pay. That's what you're able to start it off. But if, let's say, you start in the next week, I'm going over a trading plan with you so you guys can follow the proper risk management. I paid for the 100K. Okay, you said 10K. Oh, you said I passed the 10K. Oh, okay, sorry. I read the message wrong. Okay, you paid for the 100, and I was like, yeah. My bad. Read the message wrong. So yeah, I had a couple of my students already pass and already funded. So I figure, why not get everybody on board, and everybody would be taking a part of this, and everybody would benefit from this. Kevin, I'll be going over that. No worries. Each account, I'll be going over what lots. So I had a couple of my students already that had been funded. You had one of my students. So here we go. Um, he was letting me know that they had a few data feed delay recently, but they changed that to a new server. Is all good. The withdrawals hit within 3 to 4 days. You can trade NFP. You can't trade news 2 minutes before and 2 minutes after. But he said for that he just goes on his personal account. Can't trade 2 minutes before and 2 minutes after. But that's all right. And what else? Okay, so with this, you can be funded up to multiple accounts. So you can pay up to multiple accounts, but your equity can't exceed 300K. So you can have 300K accounts. You can have about, what was that, 500 to you can have a couple of these 4, 5, 6 of the 50K accounts. You can have a couple of these 25K accounts. Or you can have all of these, but it can't exceed more than 300K. So if you just have 3 of the 100K account, you can combine that to one trading account and have 300K. And that just gives you a better daily loss limit for yourself. So with 300K, you'll probably have a daily loss limit of 15, 20K, which, that's plenty for a daily loss. You shouldn't even be in that much drawdown or losing that much with a 300K account. And your max loss would probably be 30K. So yeah, your max daily loss would be 15K, and your max loss would be about. So you could allocate as much up to 300K, but no more than 300K, and you can combine all those accounts. But if you just want to have a separate account, like you want to have 2 50K accounts and then 100K account and then another 100K account, that's great. It's just as long as it doesn't exceed 300K. So you'll have 2 50K account, which would be 100K, 100K account, which is 200, and then another 100K account, which equals 300K. So that gives it up with this. So this is pretty straightforward. You have 30 days, but minimum is 10. So again, if you beat the challenge in 1-2 days, doesn't matter. You still have to wait 10 trading days. You have to trade 10 trading days. So let's say you beat it in 2 days. For the remaining of the challenge, if you have 8 days remaining, just trade at 0.01 for the remaining of the challenge, because you already beat the target. No need to lose money. Just let each day just trade at 0.01, get in, get out, and that's a trading day for FTMO. So you get in at 0.01, lose $1, which is 100 pesos, but you shouldn't. You just lose a cent or so. Doesn't matter. That is equal to a trading day. So you keep on with that until you hit the verification process. Once you're in the verification process, now your profit target is half. So now with $10,000, you only have to make 500, which is a piece of cake. And with a 100K account, you only have to make 5,000. So it's pretty self-explanatory. Just the why only 8% of people pass this is because they practice proper risk management. 92% of traders fail because they do not implement proper risk management. So that's where we're going to go over with this. This is, we're going to talk about the trading plan. So right here we have a nice trading plan of 100K. So 100K account, the monthly goal is 10%, which is what you got to make with FTMO, and you're going to be risking 1% on a trade. So your lot size on about a 20 pip stop loss is about a 3 lot size. You're using about a 3 lot size for a 100K account, and you only have to profit. You only have to profit 75 pips a week, 300 pips in a month. Okay, so 75 pips in 1 week, and you're good for that week. So 75 pips a week on a 3.33 lot size. So you have a 100K account. First trade you're taking, put in a 3.33, 20 pip stop loss, which is about a little over $700, $600 to $700. You're risking to make 70 pips, which is about over 1,500. Then another 300, about close to 2,000. So you're risking 600 to make about 2,000. So that's your trading plan. You're risking 600 to make about 2,000 on each trade. So pip goals, 300 pips, like I said, and your max, your daily, if you want to take it, for a day, you want to do it daily, scalp here or there for the day, you need 15 pips a day. 15 pips a day on a 3.33 lot size. 3.33 lot size, 15 pips a day, 75 pips a week, and your goal is met. Okay, this is proper risk management. We catch shitloads of pips. So it does use proper risk management. You're gonna achieve these targets. Okay, that's the 50K account. So now let's go over we're gonna go backwards from 100 to 50. So now we go 50. So now if you buy the 50K account, again, you have to make 10%. So with the 50K account, you have to make $5,000 with 50K. Your max daily loss is 2,500. All right. So we go to trading plan 50K. We're going to be risking about a 1.60 lot size with the 50K account. See the proper risk management. With $50,000, you're risking 1.6 lot size. There's people that risk a 1.6 with $1,000. There's people that risk it with 500 because they over leveraging. And you see the proper risk management you're using. This teaches you the discipline that you don't have. This is going to teach you the discipline that you don't have. A lot of you guys don't have no discipline. This is why you blow accounts, because you want to hit the home run to get that big account equity. But then once you have it, you don't know how to sustain it and keep it consistent profits. So with this, you're using proper risk management. You're not trying to hit the home run in one trade, although you could hit $5,000 in one trade. 50 pips, 10 lots, 50 pips. Risk 2,000. If you want to do it like that, you're over leveraging. You're over leveraging right there. So what's that? On a 50K account, max daily loss is 2,000. So if you want to be big boy, risk a 10 lot with a 20 pip stop loss. You're risking $2,000 with a 50 pip profit. You achieve it one day. Let's say that trade goes against you. Boom, you're down 2,000. You can only lose 5,000. So for that day, you can't lose. For that day, no more trading that day. You have to wait for the next day. We're not going to give ourselves a $500 cushion. So you wait for the next day. You see what being greedy got you? You thought you was about to take 100 steps forward. Now you're up 500 steps backwards. Don't try to hit the home run. You got 30 days. 30 days. 30 days. 30 days to hit the target, all right? 30 days. So with $50,000, 1.6 lot size, you're risking about 1.6 lot size times 20 pips times 10. You're risking about three, is that right? $320? 100 pips, yeah, because 200 pips, yeah. About three something. And 1.6 times 75 equals times 10 to make 1,200. Look at that. So you're risking 320 to make 1,200, and you have to profit 5,000. So you're halfway there. Nice and easy. Nice and easy. Proper risk management, nice and easy, gets you right to your objective. Okay. Now, that's the 50K account. Now we go on to 25. Let's break it down. 25K guide right here. All right. So with $25,000, okay, $25,000, what is our target? $25,000, your target is 2,500. Max daily loss is $1,250, all right? So $25,000, we gotta make 2,500. We're risking 1%, so about 250. So we're for $25,000, your lot size is a 0.80. A 0.80. Do you believe that? A 0.80 with 25,000. There's plenty of you guys that want to trade 1 lot, 5 lots, 3 lots with a $25,000. Which, not to say that it is impossible, but we're disciplining that proper risk management. So once you have the funded account, there's no emotional involved. Doesn't matter if you lose, because you're using proper risk management. You're not blowing your account. You lose $250 out of $25,000. Who cares about $250 when you're about to make 1,000 plus? All right. So with a 0.8 lot size, all right, how much you're risking? $250, right? 0.80 times 20 pips times 10. 0.80 says you're risking about a 0.80 you're risking about $160. 0.80 to make 75 pips. So you're risking $160 to make $600. So you hit that $600, you got to make $2,500. You got to make $2,500. So you hit 4 trades and your profit is achieved. 4 trades. Go for 75 pips. You're up $2,400. That's all it takes. 4 trades. Proper risk management. 4 trades. You're risking about $160. I'm using a 0.80, not a 0.83. If I was using a 0.83, how much would that be? 0.83 times. Let me actually put this here. Do I have a calculator? I know I do. Calculator. Okay, so 0.83 times 20 pips equals times 10 equals $166. Wait, what did I just do? Is that 0.83? 0.83 times 20 equals? Okay, yes, that was. Okay, now we do 0.83 times 75 equals times 10. It's still the same amount. About $622. It's the same amount. So let's move this over here. Okay. So we're risking about $166 to make $600. It takes 4 trades for you to hit your profit target. Okay, it's gonna take you 4 trades. 4 trades. So if you buy the $25,000 account, all it takes is 4 trades to hit the $2,500 mark. 25,000, excuse me. Can I still trade on my MT4? What do you mean? On your personal account? If you want to trade on your personal account, it's up to you, but you also, it's obviously using two different brokers and 2 different lot size. So that's the $25,000 account. And last but not least, we go over the $10,000. So you buy the $10,000. Do I have to use a different platform to trade, or do I sign into MT4 to trade? Sign into MT4. Once you buy whatever account package that you like, you get the login credentials for MT4. You in the password to log into their account. Okay, so with $10,000, okay, you have to make $1,000. Your risk is 1%. Okay, your risk is 1%. You're trading a 0.33 for 20 pips. You're risking about $66 to make $247. So times that by 4, $990. You got to make 1,000. About 4 to 5 trades, you hit your profit target. You risk $66. Do you understand me? $66 to make about $250. You do that 4 times, 4 trades in a row, target achieved. You do that once you pass the challenge, all you got to do, you just got to do that twice. Twice to be funded. That's it. Just got to do it twice. 0.33 times 75 pips equals times 10 equals times that by 2. 495. What do we have to make after we pass the where are you? After you pass the challenge. After you pass the challenge with 10,000, you only got to make 500. Look at that, 500. Took you 2 trades, 2 trades, 2 trades, 2.5 trades, $5 more. Took you 2 trades after you pass the challenge. So you see what proper risk management does. That's where a lot of you guys are failing in trading. So you guys want to hit the home run, want to start trading big lot size, can't exceed the proper risk management. You just can't. You just can't do it. You are too emotional. Too emotional. That's why a lot of you guys aren't successful, because you can't hold on to a trade that is going the correct side, and then you get on to a trade that looks so good for you, looks so good that it just is gonna go right, and that's where you over leverage, and that trade doesn't pay out. That's why it doesn't matter if the trade is good or not. You do not care because you're using proper risk. Each trade, even if you lose, or you're still taking it with the same risk. You're not being afraid. A lot of you guys, you go in, try to hit the home run on a trade, you lose big, and then you're scared to enter a good trade that should be going the correct way because that loss already traumatized you, that you're scared to press the button again because you don't want to lose again. You see what that mentality right there, you're not using proper risk management. And that's what that happens. You get into that little euphoric mode where you're scared to place another trade after you just took a loss. We don't do that. We keep hitting them. We keep hitting them. We take 20 pip loss and we keep hitting them. Keep hitting them, keep hitting them, keep hitting them. 20 pip loss, keep hitting them. We get 50, 100 plus, doesn't matter, but we keep hitting them. They hit us at break even. He comes back, trade's still good. We risk another 20 pips, goes for 100 plus pips. So you see what proper risk management allows you to do? Proper. This, you guys stay disciplined. I promise you, this would change your life. I promise you. All you gotta do is stay disciplined. You don't stay disciplined, you're not going anywhere. You don't stay disciplined, you're not going anywhere. In life, period. You gotta be self-disciplined. I can't discipline you. I'm trying by giving you a trading plan, tell you your stop loss, the type of trades that we take. That's the plan. That's the trading plan. That's the everything right there. That's the trading plan. How I trade, the stop loss, now the profit target. That's it. That's your trading plan. You steer away from that, you're on your own. That's you. I'm giving you a nice trading plan here. The pips that you have to make daily, you gotta make 15 pips daily, 75 pips a week, 300 pips a month. Break it down for you. Break it down for you. We know trades go more than that. Trades go more than that. Let's just give an example. Let's go on charts, give an example real quick. Look. Let's take a look at GU. Let's take a look at GU. You took GU Friday, right? Multiple entries, but let's just say one entry, right? What do you got? You got 75 pips for the day. Yeah. Week one, done. You're done for the week. Right? You're done for the week or for the day? You're done for the week. Look at that. For the week, you're done. One day, you're done. That's one trade, all right? Okay. Let's go look at another trade we took. Took gold, right? Take gold. Look at that. We took it here. Got about 40, right? He came back, hit us at break even. We got right back in. Got 100 plus. Got right back in. Look at this. Look at this. 147. Double to 75. You just made 2 weeks worth right there. 2 weeks worth you just made it in one trade. So that's you're already all right. So let's do it. Let's do it. Since we like doing this, let's do it. So 0.33. Who was this was 0.33, right? That's what we're using on this guy. 0.33 times 75. Boom. Times 10. Boom. We're up 247. You got to make $1,000. We're up 247, right? Boom. Cool. Nice. 0.33 times 20 pips. Our next trade, we're risking out of the 250 that we just won, we're risking $66. This is why a lot of you guys aren't blank successful, because you don't risk like this. You don't risk your profits of what you make. You want to risk more than your profits. I make a profit. My next trade, I'm risking my profits. I'm not risking my account balance or what I'm doing. I'm risking my profits. I'm risking what I just made. Because if I lose, I'm not losing anything. It's my profit. Out of the 250, you risk $66. All right. All right. Gave us about. Let's just say we took 100. Let's just say we took 100 on gold. Right. Let's say we took. Boom. Profit. A target. Oh, this is the verification. So you're already halfway to your profit target. You're up 5% on your account. You got to be up 10%. You're up 5%. You got to make 10%. You're up 5%. 5% already. In 2 trades. Understand? This is why a lot of you guys aren't successful, because you don't risk the way you're supposed to. A lot of you guys doing 50 pip stop loss, 100 pip stop loss. You risk 1-to-1. You risk 100 pips for 100 pips. What logic does that make sense? What logic does that make sense? Risk 100 for 100. You're always going to be break even. One trade is going to cover the loss. You're not going to gain anything. What logic is that? Risk 100 for 100. You're gambling. Correct. You're gambling. Risk your profits. Profits always outweigh our losses. Always, 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 always. We limit our losses and we let our profits ride. Limit our losses, we let our profits rise. We lose 15, 25 pips. That's our max. 15 to 30. That's our range. 15 to 30 pips. That's our stop loss range. And we're maxing out profits 50 pips to 100 plus all the time. All the time. Risk 20 for 50, 100 plus. All the time we're risking that. All the time. We risk 20 for 50, 100 plus. Every day we're doing this. Follow the proper risk management. 100K, you're risking 0.33. 25K, you're risking a 0.83. 50K, you're risking a 1.6 lot size. And then 100K, you're risking 3.33 lot size. A 3.33 lot size. So you're risking 3 lots with 100K. So you see the proper risk management, how you're able to set these and accomplish these goals. Once you're funded, sky's the limit. Just keep using the proper risk management for yourself. This is to get you on your feet. Trying to get everybody on their feet. Everybody wants funded account. Students are passing it. Why not? We all do it as a team. This is going to be a piece of cake. But if you guys don't follow it, don't use the proper risk management, you're not going to pass. You got to follow their trading parameters. You can't lose more than the exceeded amount that they're telling you for a day. So with 10,000, you can't lose 500. With 25, you can't lose 1,250. With 50,000, you can't lose 2,500. And with 10,000, you can't lose 5,000 in a day. In a day. Which you shouldn't be losing $100,000, $5,000 a day when you're using a 3 lot size. That's obviously 200 pips. You're risking over 200 pips on a 3 lot? No. You're risking 100 pips, which would be 3,000? No, never. So these shouldn't even be close to a problem, these daily losses. Not even a close to a problem. Because what are you risking? 20 pips. What's 20 pips on a 3 lot? $600. Take 2 trades. You lose 2 trades, that's $1,200 on a day. Not even, still not close. Still not close to your 5,000 daily limit. Take a third trade goes for 50 pips. You just won $1,500. You just covered your $1,200 loss. You're up $300 in profit. Look at that. Just like that. You're up $300 in profit when you were just down $1,200. See how one trade outweighs your losses? Just like that. Just like that, you're back in the game. When you're low, when you're down 1,200, you're like, oh, I'm in a setback. Your emotions getting riled. You're thinking about how to come back. Get into the next trade. You get your 50 pips. Boom, you're back to $1,500 in profit. Close that. Your target is achieved. For my standpoint, when I'm down, my first target profit is to make what I just lost. So if I lost 1,200, that's my first objective, is to make back my 1,200. I worry about my profits after I make what I just lost. It's as simple as that, guys. Proper risk management. 92% of traders fail because they don't implement proper risk management. Got people that are telling you to risk more on your account when you always want to limit your losses. You don't want to give the market more of your equity. Be quick to limit what they can take from you. Be quick. With the quickness, limit your losses. I don't give a damn about limiting my losses. I don't care. I'd rather limit it quickly, and then when it's right, I get right back, and I gain it in 5 minutes when I'm in that trade. I gain it right back, so it's no pressure. I don't care. This is what proper risk management lets you trade with ease. A lot of people trade emotional, and a lot of people get upset at, if they missed a trade or whatever. That's common. That's common if you get upset. But if you're using proper risk management and you lose one trade and then the next trade, you don't take that next trade and you get upset, that's on you. It's your personal You know, that comes with your personal belief, your personal intuition, your personal, everything is personal with trading. You know, why you got in and why you got out. It's not the market. A lot of people blame the market. And me, I blame myself when I lose and when I fail. Because I know it's me. It's nobody else. I know why I get myself into a trade. I know why I get myself out of a trade. It's me. Nobody else. Nobody else. It's me. And I understand that. That's what a lot of you guys don't. You guys blame the market. Market did this, news did that. That's not why. You decided to enter the trade. So they didn't force you to get in. They didn't force you to get out. You did. Start taking accountability why you aren't where you need to be. You guys don't take accountability. You want to blame everybody, start pointing fingers, but don't look in the mirror and start going between yourself and start actually reflecting, self-reflect. I'm not where I'm at because I don't set goals. I don't trade during London. I'd rather sleep. I'd rather be with my girlfriend. I'd rather watch Netflix and chill. I'm not up in New York session because I'd rather sleep. You're not available when the market is giving opportunity. So what makes you think you're going to succeed? What makes you think you're going to succeed if you're not available when the market is giving the opportunity for us? You don't want to trade. You don't want to be up there in London. You don't want to take a look at during New York session. So when you want to trade during Asian, when the market's not doing anything, you want to risk your money when the market's consolidating, scalp your little 5, 10 pips. Hey, by all means, that's do you. That's how you want to trade. That's when you want to trade. Hey, that's up to you. We as traders, we look for where the volatility is at. We want volatility. That's it. That's all we want. Volume. Come in, get our money, get out. That's it. Ride the wave. Banks are in, we're in. Banks are out, we're out, and we're switching. That's it. Use your proper risk management. You'll achieve this goal and piece of cake. So during FTMO, we'll be risking 25 for 15 pips. No, we're not. I'm not doing the 15 pip daily. I'm obvious because the trades that we're taking is where we're looking for a whole play out move. When we take our trades, we're looking for level 1, level 2, level 3, etc. Top, sell from the high. We're looking to take it for these 3 levels. But for the day, if we would have took this out for the day, we're close our profits or close half, and then leave half on. So for this day, say we take a sell around here. I would look at this, look nice M formation, nice sell during London, right? For that day, gives you 56 pips. Okay, not bad. You held it on for the next day by London, you got 75. Take your profits. Next day, stop on high. It's another trade for you. You get back in. So you just took 75. So you're done for the week, but the setup is still there. You get in again, second leg, another 50, 70 for the day. You hold it for the next day London, you get 90, close to 100 pips. So we're not, I'm not doing, this is a trading plan, but I trade more or less objectively. I don't trade because of what I made, the money, etc. I follow the playbook. Level 1, level 2, level 3. I never trade with target profits, if you understand like that. I don't trade like that. I trade objectively of where the banks are moving, and I trade in line with I hold that. But if I feel as if a retracement is possible and they might take me out, I'm not an idiot and not gonna take my profits. I'm gonna take my profits off the table. Another setup comes about, we get right back into it. So that's what I said about this. You could take this. More or less, we know he coming for a retracement. The retracement happens, continuation. That's it. He's doing this to get the sellers out and gather the buyers. Stop on high, take out the seller's profit, gather the buyers. Now we're going to take out the buyers. See, that's what he does. Got you. So you don't I don't set TPs unless I am unavailable. If I'm walking my dogs, I take a shower real quick. If I'm hopping on, if I'm not on my desktop and looking at what's going on, That's where I set my stop loss and TPs really quickly. Once I'm available again, I remove them. But I don't set, I set it for you guys. Once it hits, I close partials. That's what you're supposed to do. Close partials. Partial. You're not closing all your trades. Closing partial. Now this, in this instance, maybe, because maybe we don't know how far the stop hunt could go. That's why I'll take my profit. I don't know how far he would want to go. Don't know. We could expect a range or whatever, but it's up to him. We know that he's gonna stop him, but we don't know how far he's going to stop him. That's the thing. This was the case with Bitcoin. I knew Bitcoin, after we got in, that was a stop hunt, but I didn't know how far. I suggested a range. I would like to see him come back into this range, but he didn't want to go that far. See, he just quickly just came down, held, and then back up. I wanted to give it a deeper, but he didn't break this range. See, he didn't break this range. Just consolidated right in. Nice morning star candle right there for the re-entry. Rebuy. Get yourself 400 or 500 pips. Look, get yourself 500 pips for the day again. We was up. We took it on the start of the day. So we took it at 13,588. And the market gave us about 130 pips. Started the retracement, which is the stop hunt. Gathered the stop hunt. Boom. Got sellers involved. Continue. That's it. No problem. So that's why when a stop hunt is about to occur, there's no reason why to not take your profits. Now, the only case in which I won't take my profits if I'm in here. If I buy here, there's no reason to take my profits. I'm not taking my profits. I know level 1 comes about. I know this is a stop hunt. I know this. There's no reason for me to take my profits. I know this because I'm waiting for the expansion. I'm waiting for this to occur. And this is always level 2. He expands out of level 1. Again, let's go back to a level 2. Level 1, right? Level 2. Now look at this retracement. You see, he's deep. He did it a little deeper than what he did. He gave us today. But look at where he stops. Look at where he stops at previous day's low. Previous day's low. Look, boom, chill, consolidate. It's level 2, baby. Time to go back up. Goes back up, comes right back. Double bottom, level 2 characteristics. Nice W. And we're out of here. Now, this is where we expand out. Level 2 always gives us that expansion out of that range. Boom. Look at that. Boom. That's what you anticipate out of level 2. Always, always. Doesn't change. It's showing you guys the same shit. Does not change at all. At all. At all. At all. At all. At all. Doesn't change. Same shit. Any market, show you guys the same thing over and over and over again. 1, 2, 3, 1, 2, 3, 1, 2, 3, 1, 2, 3. Only thing that you guys might have a problem picking up now is the reset. And that's okay, because that comes with experience. I didn't know what a reset was until I'm like, yo, why is the market it's supposed to do level 1? Obviously, level 1 follows level 2, and he just stops at level 1. Then came to find out that's what occurs on a reset when the market doesn't pick up previous day's low as it should. Push the stops there, that's a reset. A lot of people are looking for sells, so we're gonna buy. And you gotta start thinking like them. See, a lot of people were looking for the sells here, even I, because I thought that was level 3. But at the same time, there was a different, I was looking at this at a different broker, and there was freaking impulsive wicks down here. It doesn't show you here. It shows you the stop. Beautiful right there, right? But on another broker, it's like he's wicking down here. So that's why I already, in my mind, like, yo, this should look like a reset. So I'm labeling level 1, seeing what he does the following day. Stop hunt. Okay. Does he break that high? Yes, he does. That's level 2. So I'm like, okay. I might have thought see, this is why I always look at the trade 2 sides of it. I know I was looking at it bearish. I also know he could be bullish. I see both cycles. So at this time, I see, okay, maybe this could be a head and shoulders. However, as well as I'm looking, okay, level 2. When he made this double bottom, that's when I knew it was level 2. And I'm not looking for that right shoulder, head and shoulder that everybody was looking at. Everybody's looking at this, right? This was a great sell though, because I think I was looking at it to take. This was a great sell though, but it didn't take out the previous day's low, which then validated the level 2 double bottom macro. You fucking always makes a double bottom macro, always. And then that's level 2 to 3. Now, what everybody that was selling here just got rated, stop loss rated, right? He's gonna come back into that range, still imbalanced. We still have more sellers than buyers. All these people in this range are still, retail traders are still looking to sell. Still selling in this range, still selling. So there's money up here, money up here, money that they want to go and get. Money. Got some contracts. We do another retracement. So we broke out. Remember how we broke out here? Can we get another double bottom retracement to characterize that level 2? So 1, 2, pop, 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 pop. See, what I was looking for here, see this W formation here? I was looking for it there. He occurred earlier. He did it earlier. He did it right there. Right there. So what I was looking for, the pattern came just earlier. A lot quicker. I stopped looking at the market, was 15, I stopped looking at it here. I was like, oh, maybe he'll set up New York session. I wanted him to keep dropping. I was like, maybe New York session, take that buy. He said, nah, 2 a.m. He was ready. I stopped looking at it like, yeah, about like 12-1, yeah. Stopped looking at about 12:30-ish. I stopped looking at it. 2 a.m., he gave me the perfect morning star candle formation. If I would have saw this, I would have bought right there. Again, buying here, stop loss. Let's see, this is fun. This is the low. Give it about 100 pips on Bitcoin. And we're going for 100. Back towards the high, TP1, 185. 1400 was my profit target. So this is TP1. We would have got in here, TP2 for, where you at? So we would have risked 100 pips, which is the low of that candle, 100 pips. TP1, 187, TP2, 1400. So we would have made 478 pips off of 100 pips. See the proper risk management? I was looking for this W. He did it right there. Look at the W right there. It's nice and beautiful. Once you know what you're looking for, the market plays it out, you just react. I was waiting for that, but just a little bit lower. I wanted it lower in this range. He didn't want to break out of this low. A lot of contracts here. Because why? These people are looking to sell. Boom, boom. These guys just sell. So he could or not, but this was to get them in again. That was a stop on to get them in again. They see that, market's going to sell. They sell, go hit their stop loss. It's beautiful. That's what he does. You get in, you get your money, get out. There's no reason to, out of this 400 plus pips, there's no reason to hold on to a trade every 400 plus pips. You're being greedy. Take your money, comes back, get into another trade. But definitely take those 400 pips profit off of the table. Take them off the table. But that's that. We talked about, gave you a couple of examples, talked about the challenge, talked about the proper risk management. If any of you guys that are not involved, just contact me, iwcfx1@gmail.com, and we get you started. But furthermore, we're looking to start November, which is tomorrow. Not necessarily the beginning of the Sunday, not like that, but just starting it tomorrow. Looking at what the beginning of this week gives us. If you're in the chat, I already talked about what I'm looking for on the dollar prior to the election, and you already see the characteristics of what's to come because of Bitcoin being that starting factor. Gold and all these other majors gave us the start of what should have occurred on the majors. So gold's doing its thing, GU did its thing, and EU just didn't follow through on Friday. Held this for so long, gave it up, but didn't take out the high. So I was looking at maybe could we get an inverted setup coming about, or this is possible just an extended level 3. Look for the market to give us that upside. So but this is different because we were holding on to a sell side last week when we sold this. We got in here, right? And we got hit with this retracement end of Friday. But I knew that's the false session trap move, and I expected Sunday, Monday to open up bearish like he did. Open up bearish, cool. Consolidated, hit the stops again. Double top, beautiful M formation. Let you know, again, he's trading away from what? The high of the week. This is the high of the week. Double tops, high of the week is there. We know we're bearish. And this was anytime the market goes into the weekend within level 2, you're good to hold the start of the following week for that cycle. So he ended Friday, level 2. Dollar ended Friday, level 2, bearish, trapping sellers. Again, you end the week on level 2, look for the following week for him to finish that cycle. So we're looking, just look to see it through. Just gather all those emotions out the window and see the playbook through. Just see it through. See it through. Level 1, level 2, we know he breaks out. See it through. See it through. See level 2 through, and boom, breaks out. You're seeing it through. Level 2. Now we just wait for that sell. That's what's coming about. Now we're in level 3. We're waiting for that sell to come about this week. Again, looking for a sell reaction off of the dollar for elections, followed by a post-bullish move after. Not necessarily the same week, but obviously probably next week, the week after that, start again a bullish cycle. So I'm looking for this to just be a 1, 2, 3, and then come back up. 1, 2, 3. Start again, but take out these highs to 3. Continue the bullish cycle. I see this guy being a bullish trend. I see dollar being bullish after election. So just want you guys to follow through of what we're looking for this beginning week. It is elections. Market may be volatile, may not be. However, again, told you guys, you should be doing this on your own, going back and back testing. Okay, what happened last elections? So last elections, you go back to 2016, right? I type it in? Yes, I could. 2016, and we go to November 3rd. 3rd of November. And I got to go to a higher time frame. So boom, boom, 2016, 11/3. Why can't I go? You did it to me before. I gotta go back like this. There's no way. All right. November 3rd. All right, look at that. So this is what I said. You guys have to be doing this on your own. This is how you guys are gonna learn. not just by me always feeding you silver platters, showing you guys everything. You guys gotta go do it. I've already done this already. Long time ago, I've done this all the time. I don't have to do it now because I already see it, plain sight. I don't have to mark anything because I already see it. That's what comes with experience. I don't have to mark up my charts when I'm looking at it because I know what it's already doing. I do it more or less so you guys can see what I see. I already see it. I don't need to mark it up. So this told you guys what happened 24 years ago. Go back and see how the market led to the election. Okay, so it was Obama versus Trump, right? Obama versus Trump. So we had a bullish dollar leading into election, right? Election came about. So the 25th of October of 2016, by the 27th, we got a double top. Nice double top on the market. Market created a beautiful double top, right? After that, we got level 1, hit the stops, level 2, going down towards level 2 characteristics, come back up, M formation. See, a lot of you guys, and I will understand because it's probably think it's history. I could get that. But when he does this, that's how I know that's too. It's always, elephant is always in the room, and it's based off of the characteristics. And I show you this shit all the time. So what happened? November 3rd came along, right? President Obama lost, President Trump won, right? So what do we got? We got a move to the downside. So fake move to the downside, followed by a bullish rise. President Obama lost, President Trump won. Again, we got a bullish rise because of President Trump being president. So again, where are we now? So we just gave you an example. Okay, so let's see if we could go 4 years prior to that, how the market set up. So can we go to 2012 on the 4-hour chart? So let's go to the 4-hour chart. And let's see, can we go to 2012? 2012 of November. Can we do that? And he's not. All right, so let's go daily. Let's go 2012. Okay, 2012. 2012, which is around here. Okay, what do we got? 2012. So we had in October set up the bullish cycle. So we're always in a bullish cycle. All right, so you see, you guys gotta, this is how you just gotta pick it up quickly. We're always in a bullish cycle prior to elections. Prior to elections, we're always in a bullish cycle. Comes back, we're gonna start our bullish cycle. So we get them here. That's the second leg. Got level 1, we got level 2, 2 going to 3. Level 3, double top M right there. Boom. Now we're gonna get a nice bearish cycle. Woo, level 1, Wu-Tang, level 2. Level 2 doesn't take out level 1, and we're at level 3. You see the reaction why he doesn't take out this low? At all, this whole pattern doesn't take out that low. See where we're at? So now you see as to why the market pre-elections bullish, after bearish, continuation to the bull side. So we get a negative reaction for election, but followed with a bullish post-reaction. And that's what I'm looking for. That's what I'm looking for. But just this example that I just gave you, you guys have to be doing this on your own back testing. I'm just giving you this little example for what we're looking for elections. But even if it wasn't elections, this is just going back in time. That's what you should be doing regardless, and starting and counting your level and seeing where you're at in the market. Taking that, just that plain little hindsight of, we looked at what the market is at now, what it did in 2016, and what it did in 2012, when President Obama was in the office for 2 terms, and when President Trump was in office. We're seeing the reaction, what the market leads to, and what the market follows. So now, where we're at now is a bullish cycle leading into elections. We're looking for a bearish reaction followed by a post-bullish move. All right, so leave you guys off with that. Get your account started, 10, 25, or 50, 100K count. Went over the trading plan here for you guys. You guys have any questions, just email me, iwcfx1@gmail.com. Hope you guys have a wonderful weekend. See you guys at the start of the week.